We call it the curse of the mortgage industry. And here's the deal. Once you've made it through your first 2 years as a mortgage broker or a MLO, it's pretty easy to make $100,000 a year. However, so few actually push the envelope to make several $100,000 per year, and only a very small percentage cross over that 7-figure line. Yet, we all have the same opportunity. So what's holding you back? In today's episode, JC and I are going to do a deep dive into the curse of the mortgage industry. Check this out. Ladies and gentlemen, boys and girls, children 18 plus. You are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my main man,
JC.
John Coleman.
Dio, what's poppin'?
Coming off that long holiday weekend. How was yours?
Trash.
It was trash?
Yeah.
Was it trash, or you just want the people to believe that no part of your life is joyous?
Actually, I do like putting out facade because I love my life, just except when I have guests that come over to the house and clog my toilets. I don't know how you people
True story
do it.
That happened?
Yeah, I don't know how people do it, like have guests over.
I couldn't
it's rather
imagine
irritating.
You having guests. That was obviously your wife's call, not your call.
Yeah, clearly, because simple things like when people get off an airplane, especially if they flew Spirit, fail. But if they fly Spirit, get in the Uber, drive to my house, the first thing they should do is take off their clothes, put them in the wash, and take a bath. Because there's no way you're sitting on my fucking white sofa in that dirty ass shit.
But they did, I bet.
I asked them to sit on the floor with no shame. I don't care. And I said, you can sit in the dining room on the wooden chairs.
There's no way.
I shit you not. And then every time they leave, I have to spray the Lysol disinfectant spray.
Until they bathe?
Every
time
they sit down, Dustin.
Because they were strangers?
No, I know them. I came to my wedding. I love y'all. But they're just fucking dirty. That's just the way I am. So I have anxiety now when I have people over. I guess this is why I don't have people over.
So there you go, y'all. When I travel to various mortgage conferences, when I go to speaking engagements for mortgage companies, and y'all ask me, hey, how come JC's not here? That's why. That's why JC doesn't come. He will be in Las Vegas, though.
Yes.
You will
Shout
be
out
in Vegas.
Vegas.
Yes, Mastermind Summit is right around the corner.
I'm looking forward to that.
Y'all, if you want to come hang out with me, JC, and the rest of the T-Lop crew, please know, go to our website, tloponline.com, go to events. Through the events tab, you can see the link and you can register. It's one of my favorite events of the year, and that is one of the rare events JC will be at. Now, if you're going to be at the Florida Mortgage Bankers Conference,
FMBA?
It's actually MBAF. It's MBAF.org.
I can see that.
Yes. Second week of June down in St. Pete. No, JC will not be there, but I will be there.
That's a nice hotel.
Well, you can go if you want to, John.
It's a long drive.
It's a long drive, and I think I'm doing it there and back. I don't think I'm staying the night.
Oh, wow.
Yep. But if you want to come to Baton Rouge, we can maybe talk about that.
Yeah.
Yes. We have the Louisiana Mortgage Bankers Association is doing their annual conference in Baton Rouge in August. Check this out. Our employer, Lower, is the head sponsor of that event. I will be keynoting, and maybe or maybe not, we can get JC there.
Maybe.
What do you think?
Yeah, anything to support the movement and shaping the future of the mortgage industry, Dustin. I'm all about it.
Yes, as you put your head on your fist and you take a nap.
No, man, but we're not going to take a sleep. We're not going to take a nap on this episode, Dustin, because you got something geared and ready and primed for the people. Isn't that right?
Yeah, I do. But before I do, how about this? Let's take a quick pause for a word from today's sponsor. Are you looking for a mortgage lender who gets it? Then you're looking for today's show sponsor, A&D Mortgage. A&D Mortgage is a Forbes top 10 wholesale lender and the #1 QM lender in the country. For the past 20 years, A&D Mortgage has helped mortgage brokers fund loans from DSCR to bank statement to conventional and even FHA. The best part about A&D Mortgage is they make it easy. Thanks to their technology, you can submit deals, check statuses, manage your pipeline, all from your smartphone. A&D Mortgage makes lending simple. If you're looking to get the job done fast, simple, smart, and hassle-free, then you're looking for A&D Mortgage. Visit admortgage.com to learn more and get started today. This is a theory that my partner back in the day, Smalley, and I had.
Okay.
And it may even been him who coined this phrase. And I'm sure he may have swiped and adapted it from somebody else. But I've owned it for the past decade, and we're going to talk about it in today's show.
Okay.
It is the curse of the mortgage industry.
Yeah, as soon as you're branded with an NMLS number, the curse begins.
Possibly. Now, you know what's funny about that? The curse of the mortgage industry is technically about income and people plateauing quickly.
Oh, yeah.
However, I will share with anybody who is getting started, those first 2 years, you got to pay your dues. And anybody who's been in the business for longer than 2 years, I hope you're laughing right now. You're smiling, but you're like, damn, that's true. Oh, man, your first 2 years, those mortgage gods truly make you pay your dues. Because here's what happens. The realtors and the builders and the financial advisors that you're calling on, although they're nice and although they may be in growth mode or even younger in their careers like you are, they still smell the fact that you're new. Like even if it's that sixth sense and they're just picking up on it, and for whatever reason, you're not getting their like high quality leads. They like you.
Yeah.
They want to test you out, but they're going to give you something that's more challenging that maybe someone else didn't want to serve.
Correct. The bottom feeders, the catfish leads, Dustin.
Yeah. So there's a certain part of you have to like trudge through the first 2 years. And then there's also this part. You'll have the craziest, weirdest shit happen to you that you couldn't have prevented. And I swear to God, it happens more in the first 2 years than it does like any
All
other
20
time.
years combined after
Correct.
that. Yeah.
Yes. And it's like the craziest, like this transaction is not closing because so-and-so got hauled off to prison and so-and-so is a part of the transaction.
Sounds like a Florida man special.
Yes. Those first 2 years. But that's actually not the curse of the mortgage industry. The curse of the mortgage industry is this. Is like, yes, you get started in those first 2 years. You're getting the harder types of referrals. And you're just getting the weirdest scenarios, the things that come out of left field, the Florida man special, as you called it, happening to you. But you're also trying to survive, right? Those first 2 years, I tell people every day they ask, look, you have to plan on going 6 months without a paycheck. This is a full-time job where you're going to work 5-6 days a week, 8-10-hour days. You're going to have to become obsessed. You're going to have to fall in love with it and understand you're not going to make any money the first 6 months. And the money you do make in that first year is going to be backloaded into the last 5 months. And it might not be until 2 years into this that you feel like you know what you're doing and you feel like you've quote unquote made it. Once you've done that, which not everybody does, right? There's a lot that don't make it out of the first 6 months, that don't survive the first year. Heck, I've had 2 men that I've onboarded. One was a friend of mine from high school, and one was the top title rep in all of Central Florida.
And let me guess, neither one of them worked out.
Neither one of them worked out, but it wasn't that they weren't good. I mean, my buddy that I brought in, he came from law enforcement. He was making $100,000 his first year.
So what's the problem?
Made $100,000 his second year.
Okay, let's go.
He hated every minute about being a mortgage lender.
My star child, I love him.
Yes, he hated every minute. And then the other guy who came in, I mean, he crushed it in the title industry. He had every realtor in Central Florida loved him.
Yep.
He was working his butt off. He was used to being available on nights and weekends. But what I learned with him is in the title business, everybody gets to hear yes.
You're everybody's friend.
And in the mortgage business, we have to tell people no. Like, sorry, you have a 485 credit score. You don't qualify.
What do you mean?
Sorry, your DTI is 175.
What?
You don't qualify. You know, it's like we have to tell people no, and he just didn't like that aspect of having to tell anybody no. So within like 90 to 100 days, he like backed out. And this was a guy in his second full month because of his sphere of influence. This dude was like funding $2 million a month, making $25,000, more money than he ever made as a title rep in 1 month. He was making a mortgage but hated it, right? So there are those outliers, but there's people who just don't make it because they part-time it, because they don't put their head down and their blinders on. Whatever the case may be, it wasn't cut out for them, or they weren't cut out for this.
Stop giving people orange slices, Dustin, and call it like it is. They just weren't good enough.
They probably just weren't good enough.
Thank
They
you.
weren't made to be entrepreneurs. They weren't made to be the master of their own destiny. Sales maybe wasn't their gig at the end of the day. Well, then there's those that make it through.
Okay.
There are those that make it through. And look, if you make it through and you're full time, I've got to believe you're funding at least, even in today's market, 30 loans a year. Okay, and if you're doing 30 loans a year, more than likely that could be close to, on the low end, it could be 7 million in volume. On the high end, it may be 10 million in volume. And depending on your comp plan, you're pretty darn close to making 100 grand a year. Now, you bump it up to 40 units, which is only 3.33 units per month, which I'll tell you, in a normal market, that makes you average. I want my LOs averaging 5, right? If I have 12 branches and we have 60 LOs, I want to look across that spectrum. Yes, I have some rookies and yes, I have some mega producers, but I want my originators on average funding 5 loans a month. In today's environment, which is, look, the past 3 years have been a very trying market. I'm okay with 3. I'm okay as long as the effort is there. It's like having a kid that gets a B, but she did all the extra credit. She got the tutor. She did the test retakes. Man, if she gets a B in that class, I knew the effort was there. I don't mind someone putting the effort in and only doing 3 units per month in today's environment, but we fast forward to 12 to 18 months from now, no, that number needs to be 5. But if you're only doing 30 to 40 transactions a year, you're making 100 grand a year. And the curse of the mortgage industry is that this industry is one in which we could turn around in 3 years and robots have taken over.
Yes.
We have always been fearful of technological advancements. I mean, I'm going back to like when DU was first rolled out by Fannie Mae. The industry was talking about, we'll never need LOs or underwriters again. When we stopped reading rate sheets and we went to softwares like Optimal Blue and pricing engines. I think back in the day it was Loan Sifter, then Optimal Blue. We were like, oh, that's the death of the loan originator because you don't need a human being to read a rate sheet. Well, nope, we're still alive and strong. However, there's always that fear. Most of us at best have a 4-year degree. Probably not in finance, probably not in banking. Many have a high school diploma or have some college. Hey, we're not oncologists. We are not brain surgeons or heart surgeons, and we're not some kind of a Silicon Valley programmer coder who's inventing the next best technology. No, we're service providers, right? Like we, as mortgage lenders, I've always said this, we have blue collar work ethic and we do a white collar service, but it's still a retail service that we're providing to the communities that we serve. So the curse of the mortgage industry of being a mortgage broker is once you get it through the first 2 years, like you've survived, it's pretty easy to make 100 grand and you think that's a lot of money, which again, if I'm comparing it to a career as a nurse, it's a lot of money. Law enforcement, it's a lot of money. EMT, it's a lot of money. School teacher, it's a lot of money, right? It's a lot of money. Even looking at hospitality management, it's a lot of money. Making $100,000 to $110,000 a year is a lot of money until it's not. It's a lot of money until you realize, but it's not life-changing money. It's a lot of money until you realize, but you're not going to be able to like retire early. It's a lot of money until you realize, but I really can't donate to the less fortunate or tithe to the manner that I wish. And it's not a lot of money when you realize, and it could all go away. I don't know if it's 3 years, 5 years, or 7 years. And because someone recently asked me this question on YouTube, and I'll answer it, I don't believe AI is going to replace the loan originator. I think AI is going to allow and mandate the originator do twice as many units to make the same money they're making today. I don't think the originator should care as long as the originator looks at their hours and like, well, I'm still working those same 36 to 42 hours a week. Doesn't matter how many units I have to produce. And I think the originators who stay in business are those that are true advisors and not the ones that are order takers, not the ones where mortgage is a side hustle, not the ones where they don't take their profession seriously. They treat it like a job and not like, they are the CEO of their own LLC. But I do see AI very well knocking out the need for most processors, unless you're great at customer service. Wink, wink, nod, nod to my processor friends. Knocking out most underwriters. unless you're the underwriter who really knows the ins and outs of the entire industry, and at which point you're going to be the human that's probably managing the technology, but there'll be less humans needed because technology is going to be doing the bulk of the work. I look at disclosure desk. I look at a lot of the functions of a closing department. I look at servicing, the servicing side of our industry. I look at QC and QA. And yes, unfortunately, I would say that there's a lot of people in those departments that if they don't stay one step ahead of the curve, if they themselves aren't trying to be the best at what they do, and if they themselves aren't trying to give great service to the clients they serve, which by the way, the clients those people serve may be internal clients, I could see AI taking their position and eliminating it. Now, do I think companies will go through and do a massive RIF, like a reduction in force? I'd hope not. I hope what we would see happen is that as people move on in their careers or move on in their lives, that those positions don't get backfilled. Or the right people will get repurposed into more of a customer service role, but the people who are scorecarding below average, maybe those people would be riffed. But again, not for this episode. This episode's more about a call to action to my mortgage broker and my loan officer friends who are like, y'all, you have an opportunity of a lifetime to make the most amount of money. You control your own destiny. Do not allow the curse of the mortgage industry to bite you in the rear end, because it's only a matter of time where technology could disrupt us to the manner that we don't have a blank check that we're just cashing every single month.
Speaking of blank checks, what does that check look like for, the average loan originator making $120,000 a year? Is it like a consistent 10 grand every month, or is it like 8 grand one month, 2 grand the next, and then like 50 grand the next? Like, how does that work?
Yes. Well, I would tell you, when you look at the mortgage industry in general, you can get out a calendar, you can go January to December, and it looks like a perfect bell curve. Right. So the least amount of volume is typically being funded in January, February, March. The most amount of volume being funded June, July, and August. Then it dips back down September, October, November, with always a little spike in December. So if that's how the production is going to go in most typical years, then I'll tell you your income's going to go that way. So you'll make the most of your money April, May, June, July, August, September. You'll make the least amount of money in January, February, November, December. So yes, it's not 10, 10, 10, 10, 10, 10, 10. No, it may be 17, 7, 18, 3. But actually, I would say, let's say January would be a decent month because you're probably coming off of December. Most of us in the loan world, we get paid the following month based on what closed last month, right? So what I closed in December is going to let me know what I'm going to make in January.
What's the fattest check you've known, either like someone like, yo, August I closed blah, 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 and my check was like 300 racks. What's the
that happens.
What?
Yeah, that happens.
Jesus Christ.
Yeah, I mean, think about it. If you're a $200 million producer, then why couldn't you, right? You're doing 300 units a year. Why couldn't you potentially, 400 units a year, potentially throw up 60, 70 units in 1 month?
I've seen that on PowerPoint slides during like all hands calls where people like have that kind of volume and it doesn't really translate, but now it does.
Yes. Yes. So it is quite possible that and those are they're the outliers. I mean, I have 2 or 3 dozen friends that make $1 million a year in this industry, right? Most, once you make it through the first 2 years, you're at that 100 grand. And a lot of people, too many stay there. Too many get caught by the curse. I'm trying to get people to push through and recognize that if your ability to make that type of money were to vanish in 3 years, 5 years, 7 years, how pissed are you going to be at yourself if you feel like you left some on the field, right? Like, we never want to leave anything on the field, so to speak. Like, we want to give it our all, take advantage of it, and let's not just assume it's always going to be there. That was the best thing that the Great Recession taught me, is that when we rebounded and we started making good money again, which, we stopped making good money in 9, It took about 12 before I was making good money again. And I ran from 12 to 22. But from 12, 13, 14, I was waiting for the other shoe to fall. I was waiting for, I was like, what was it? Is it Chicken Little? Right. I was Chicken Little waiting for the sky to fall. But what it forced me to do was save like no other. And then I turned that into a habit. And then once I realized, wait a minute, I'm going to continue to earn for the next 3-5 years. It was always, hey, the next 3 to 5 years, can I earn? The next 3 to 5 years, can I earn? I can look at this industry right now in 2025 and say, for the next 3 years, can I earn? The answer is hell yeah. Cool. Then what do I need to do to make the most money today, next year, the year after? So that if I get to 2030 and all of a sudden robots are literally doing my job for me, and I'm one of the unfortunate ones that wasn't chosen to be paired with the technology so that I can continue to earn a living as an advisor with my assistants who happen to be machine learning, then I can at least say I left it all on the field. I made the most amount of money I can make, and I saved a ton so that when I have to go to my second career, whatever that may be, I at least have a nice little nest egg and I have no debt.
All right, Dustin. So I busted my ass and I did everything you said, and I finally plateaued and I hit my highest earner at my highest earning year. I made $127,000. What would you say the ceiling realistically is for me? Should I try to? Obviously, I can't close.
300 all day. 300.
Really?
Like, I will tell you straight up, because I have made a living over the past decade bringing people into this industry who had no experience, right? I have this rookie assimilation program. I'm literally teaching it to lower right now, so we can couple that with some of the stuff we're doing with the acquisitions like we just had with Movoto and some other things behind the scenes, where it's like, I want to create the future mortgage lender. I mean, it was a lot of my thesis that I was able to use to win the MBA's Future Leaders Program revolved around creating the future mortgage lender. And I will not hire you. One of my questions is, what's a lot of money to you? And if your number is not north of 250,000, and more likely, if it's not below 500,000, red flag for me. I've learned over 15 years of hiring rookies, red flag. This industry is too hard to get through those first 2 years that I don't want to onboard anybody unless they're thinking, how do I make 250, 300, 400 grand a year? Someone says, I want to make $2 million a year.
Go sit down.
Correct. Yes. Yeah. And here's why. I'll say right back to them, who do you know? How many people do you know that make $2 million a year personally? No, you don't know someone. That number is just literally pulled out of your ass. I think at that point, you're showing me how out of touch you are. But 250 to 500, that's the number I'm looking for. And I'm still going to ask you, who do you know? Hey, who do you know that makes that type of money? Because I know 100 people by first name and last name that make that type of money. And I know exactly what they did, what they endured, how they operate, what their week looks like, their month looks like in order to do so. So 250 to 400, if you told me I just had my best year ever, I made 127, I'm like, that's amazing. What's the next level up? What do we have to do, John, to accentuate what's working so that we can get you to double that?
Well, I don't know. I've been having this. I worked 13 hours a day for the past year, and I've got no sleep, and my family hates me. So I really left it all in the field, as you would say. So I don't know how to squeeze more juice out of the turnip, Dustin.
Well, I mean, a good coach would be able to slide in and give you that, because if you're working that many hours and you're only making that type of money, you're missing the boat. You're missing the boat. You need to go read Buy Back My Time by Dan Martell. You need to go read 10X is Easier Than 2X. Like, there's some books, if you don't want to hire a coach, that you need to go read. But more than likely, you're not thinking big. You're not organized. You don't have systems. You're not leveraging automation. You probably don't use your calendar, right? I can tell a lot by someone just by having them show me their calendar. So more than likely, you're disorganized. You don't follow systems. You don't have processes. You are letting your business run you. You're not running your business. Like, that's exactly what I would tell you, but that's an easy fix. Here's what I can't find. I can't find people that have a go button, a full tank of gas, and a high ceiling.
Yeah, because you look at them every day in the mirror, you weirdo. You look at them every day.
Oh,
I can't find them because you already found them because it's you, Dustin.
yeah, but I mean, I want others. I want others that have a high ceiling, they have gas in the tank and just a go button. That's what I'm looking for. And I think those people are the ones who really need to fully embrace the curse of the mortgage industry. And I'm not going to discount that 100 grand is not a lot of money, but what I'm going to discount is you have the opportunity to make 400, 500, or 600 grand a year and you're not capitalizing. I think you're missing a massive opportunity, especially if you think about only having another 3 years before there's some kind of a reset. I'm not saying you won't be able to make 400 or 500 grand a year 10 years down the road, right? Because if I felt that way, I'd be getting the F out of this industry. Right? I'd be freaked out right now. I'm not freaked out. Like, I feel like challenge accepted. Like, I had a conversation this morning with our colleague Mark about what do we need to do at TLOP to make sure we're ahead of the curve in embracing AI and AI assistance and all the various things that we need to do running a coaching company. I think LO's same exact thing, right? What do you need to do as an LO to make sure you're showing up online, right? That's your content, that's your website, that's getting one-to-many, all the stuff we coach over at TLOP Originator Coaching. And then what are you doing to leverage technology so it will be you and your two robots, as I like to call them, that are generating 100 leads, that are serving 20 borrowers, right? 20 borrowers at an average loan size of 400 grand, right? You're still talking about $8 million in volume. Even if you're only making 50 basis points, that's $40,000 a month. Like, and if I did I do my math right? I did my math right. Yeah, 20 transactions at an average loan size of $400,000 would, give me $8 million. Even at 50 basis points, you're still making $40,000 a month. You can do that, but only the elite and only and only those that are advisors. So do this. Don't allow yourself to succumb to the curse of the mortgage industry. 100 grand is good money. It's not great money. It's not forever money. And you put yourself in a position to make 300, 400, 500 grand every single year. If you're not there yet, let me ask you why, and more specifically, what are you going to do? Nothing changes if nothing changes. What are you going to do? Hopefully, they're going to go to our YouTube channel and subscribe if they haven't done so already, because there is a shit ton of free coaching and sales training on the YouTube channel. It's the Loan Officer Podcast, a.k.a. TLOP.
Yep.
Hopefully, you're getting the newsletter that I write because it's free. And if you haven't done so, go to our website, tloponline.com, and sign up for the newsletter. By doing so, you're now invited to one free masterclass per month. It's that same website that if you want to go hang out with a bunch of people who make 300, 400, 500 grand a year.
Drinks on them.
If you want to learn from people making $1 million+ a year in this industry, go to Mastermind Summit.
Yep.
That's what those conferences do. They allow you to put yourself in the room with other people that are making it happen. But what you shouldn't do is sit back and do nothing. And then finally, if you really want to embrace nothing changes if nothing changes, come get coached by us. Learn from me directly. Learn from my 5 coaches. All of us are top producers based on the income we earn, the units, and the volume we funded. Come let us teach you what we did to get to where we are and what we're doing to stay on top. That is the same exact website, tloponline.com. It's originator coaching community is what you're looking for. And eventually, some of you are going to want to upgrade into a boot camp or possibly even elite coaching. But John, today was all about the curse of the mortgage industry, how to recognize it, what it is, and more importantly, how to make sure you don't let that curse bite you in the rear end and hold you down.
Fascinating shit, Dustin.
Do you have any last minute comments for our glorious audience?
No, I don't. Not
John says, quit trolling me on YouTube because it gets me
I don't
all
give a
fired up.
shit. Give me more, you fucking losers. Comment all you want. You know why? Because if they're commenting on YouTube channels, you know what they're not doing? Loading up their pipeline. Low producer. So yeah, go ahead.
On that note, he's John Coleman. I'm Dustin Owen. You've just tuned in to the Loan Officer Podcast. That's all the time we have for you today, but we do look forward to catching you
on the next episode.
Peace.